Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the Monday edition of the week ahead. Today, we're going to talk about some of the key events coming our way this week, but we're also going to focus on the breaking news out of the Middle East. You'll notice that we started just a little bit early, and the reason why is we got a lot to get to. So I understand we were scheduled for about another 4 minutes from now, but let's go ahead and just get on with the program because there's a lot to cover here. Breaking news is bringing volatility that we just haven't seen. I haven't seen a crude oil market like this in over a decade. It's an absolutely fantastic time to be looking at crude oil, but you have to be able to manage the volatility. You have to understand exactly what we're trying to get accomplished when we trade and what we need to do to be successful. The number one thing to do is if you're trading oil, and most of you are, a lot of you are, if you are trading oil, you need to make sure that your risk your risk assessment is correct at all times. You need to make sure that your risk management is aggressive and something that can actually help you and not hinder your performance. It sounds easy to just be careful and watch your risk, but in markets this big, we have to be very, very cognizant of what's happening. What is really happening when we see this much volatility? We are seeing the open auction format in its truest form. This is price discovery. Nobody knows what a barrel of crude oil is worth. They don't know what it is worth because of the budding, the conflict. I'm going to call it a war, the Israel-U.S. Iran war. It is definitely one of those that we're watching. We don't really know what's going to happen here. I've got some readings on the VIX that aren't good. We've seen it spike above that long-term 30 level, and it's absolutely just taking off to the sky right now. We're talking a lot about what it is to be in truly a market that is sort of, I won't say disjointed, but it's definitely confusing. Some minutes we get a big rally out of the dollar, and then the next minute we get a big sell-off. WTI crude was up around 120 last night, $119 a barrel, and it is now at 94, and it is crashing. So we're going to cover all this and much, much more. Any questions that you may have, be sure to check it out, be sure to leave a message there in one of our live chats, either they're out in YouTube land or in the How to Trade Trading Room. You can see this is sort of one of our new pages, Trade Oil, 0% commission over at Switch. That's really what we're going to be talking about today is crude oil, probably some commodity dollars as well. If there's any markets that you'd like to cover specifically, be sure to drop them in the live chat. But you can see crude oil is just absolutely on fire, tremendous volatility. Nobody really knows what to make of it, but you do have a lot of information here and things that can help you trade crude oil with a little bit of confidence. So you definitely want to check out that page. I dropped that in the live chat out there in YouTube land, and I'll go ahead and I'll drop it here in the live chat on the How to Trade interface. So you definitely want to be checking out those pages. A lot of those tools and things are out there. I put out a bunch of YouTube shorts that are based on the energy trade in the Middle East, some different things that you need to be watching for as this situation unfolds. We're going to talk a lot about the market dynamic of what's happening with regards to risk and volatility and how you can come out of this on top. But today, it really is all about breaking news, and we have to understand that Iran war is definitely driving all participation. There's no question about it. So a lot of action in there, a lot of opportunities. I'm confident everybody's doing well. Rookie trades in queue. Good morning. Happy Monday, rookie. Let me see. Tina Jing. Hey, Tina, how you doing? I'm doing very well here. Thank you. Kirsty, good to see you. Kirsty T, welcome. New names. A lot of new faces coming through the rooms these days. It's fantastic. I love to see folks getting involved in the markets. It's always a good time to trade. Now is a real good time to trade. Jason Jackson, Jason Maxson. Good to see you, Jason. Welcome. Over in our How to Trade community, Kevin, good to see you. Kevin, welcome. Good day, good morning, good afternoon, good evening, wherever you may be. Andrea Garwal, good to see Andrea. Andrea had some good questions here on the crude oil markets. We're going to cover those in just a second. Tuku, always a pleasure. Tuku, Steve Francis. Let me see. What we definitely could be looking at here on U.S. oil is one of the biggest moves that we've ever seen. There's no question about it. This was a chart that I put out. I put it out on Shane V Trader, Shane V _Trader on X. I had a little video that I put out late Friday, and then we've sort of been updating that these levels, interesting levels. I won't know, I wouldn't really say that any of them are hugely important. They haven't really been as effective as I first thought, and the reason why is the participation is so massive. The participation is so massive in this market that the technicals really aren't holding up the way that they should. It's all about big round numbers, and that's okay. That's going to give us an opportunity to use very simplified approaches to break down what's happening in the market. So I've got it marked on my long-term map here for U.S. oil, WTI essentially, the Russian invasion of Ukraine. That's back in March of 2022. You saw that explosion right up to 129, and we saw a run at 120 last night. 119.48 is where this market topped out at, and that was after opening this month. It opened at $75, our low $69.20, and we went all the way up to 120. So this was a big month, no question about it, and we're only in the 9th day. So nice big pullback here off of last night's highs, and now you can start to really see the market dynamic evolve around maybe that was a head fake to the top side. Maybe there was some good news. Maybe there was something that brought oil back down from a lofty level. I got to be honest with you. I watched the open last night. I watched it open right around 103, and then we saw the big rally up to 119, and I said there's nothing up there. This market can go as high as there was nothing up there. It could go anywhere. I was sitting there going, this could go to 200. This could go to 175. I mean, it was such a huge move that now to see the bearish price action shouldn't really be a surprise. Shouldn't really shock any of us. What goes up must come down. So we're definitely seeing that. But I think one of the reasons why you're seeing this market come off is there was a meeting from the G7 nations. Let me just pull that up real quick. G7 pledged to release a bunch of their oil reserves, and that essentially is what it is. But look, we're playing games. Broad agreement at G7 not to release oil reserves just yet, says G7 officials. So they just pumped that about 2 hours ago. G7 discusses joint release of emergency oil reserves. Oil falls back below 100 after G7 stands ready to release emergency oil reserves. This is interesting. This is something that I didn't see coming, to be honest with you. I didn't think they were going to be releasing oil reserves just yet. This war is only about a week old, 8 days old, 9 days old, and to see it already talking about oil reserves really suggests that this situation is a little bit more complex and a little bit more dire, I would say, than we first thought. So there's been a lot of escalation over the weekend. We saw some oil refineries get hit Saturday night in Iran. We've seen a lot of retaliation, a lot of saber rattling from the Iranians with regards to the Strait of Hormuz. Definitely one of those interesting places in the world. You can see U.S.-Iran war, biggest oil supply disruption in history. That has to do with the Strait of Hormuz. Oil tankers transiting the Strait of Hormuz must be careful, Iran Foreign Ministry warns. So it's very, very interesting what's happening. Our news is breaking by the minute, and that's why there is the volatility. So if you're going to trade, you got to have an approach. You have to be able to really monitor your risk in real time and get in there and get after it. And what I mean is when this trade goes against you, or if you find yourself on the wrong side of a trade like this, you get out. Now, I talked to a trader earlier today that caught the top of this move, was actually a net seller from right up near the daily high, and I go, that was a fantastic trade. That's big money. Fantastic job. Well done. You know who you are out there. But big picture, are we bullish or bearish? Well, I got Andrea Garwal's asking some great questions about Fibonacci's and where would we be looking to base maybe our Fibonacci retracement sequence to maybe buy a pullback. Well, interesting question, a great one. I'm glad you brought it up. This right in here, I would nullify it now. I think that all this is over. I would definitely have an eye on this high up here at about 129. Keep an eye on those Russia-Ukraine highs. But other than that, we can start doing business down in here and might actually make a little bit of money on a pullback buy. So the first thing I would be looking at is a monthly chart. Nice spike low that developed back there in December. You could go right there from that December low right up there to that multi-year high, right around 119-ish, 119, what was it, 48? I believe that's the absolute top. Dial it in perfectly if you are going to trade it. That's for sure. Pullback zone right there at 94.81. You're pretty much trading that right now. So, 6 of one, a half a dozen of the other. Do I believe that's going to be robust downside support? Well, let's take it down to a 1 minute chart and see exactly what's setting up. You can see we've really challenged this level. That was probably the trade you want. That was your first test of that zone right about 9:30 this morning, my time, 11:30 a.m. Eastern. Came right down, bounced off of that dramatically. Then we took it out. Then we bounced up, and it's starting to act as support, but I think it's really, really tough in there. Really tough in there. So if I was looking to trade and I wanted a maximum opportunity of success, the first thing I would do is I'd want great trade locations. So right now we're doing business up at 94. Keep an eye on 50% down there at 87. That's probably also going to be a key level for this massive run, this massive breakout. And then also your 62% down at 79.50. I know nobody believes that we could go down to 79.50 this fast. We could very easily sell off to 80. It could happen today. So that's really where we're at. Long-term levels, I really fancy those. I think they're pretty good. But let's go ahead and get a little more granular. Let's talk about perhaps our daily chart. What do we have on a daily? And there's another great area where we can build the Fibonacci sequence and be pretty good. Fibonacci retracement sequence and be in decent shape. You got a spike low that occurred back on the 26th of February. We could build right off of that low there and then come right up here. And you can see you're sort of trading right around 98.12. 50% is 91.53, and then 62% is down there at about 85. I really like that 85 zone. I think that if a person could get an opportunity to be a net bidder from 85, you've probably got great trade location, and then also 78% down there at 75.50. That's also pretty good. Are we going to get there? Well, it looks to me like if we can't keep a handle on the 100 level, the sellers are in control right now. There's no question about it. We saw U.S. equities deep in the hole on the open because of the big crude oil bump, and now we've seen a huge reversal off of session lows. Now we're starting to trend a little bit south on equities. We've got U.S. oil, only up about 4%. That's absolutely fascinating. At one time, what was it, up 16 or 20%? It was a staggering move. This is fantastic price action. We've got some great levels. One last thing that I would love to point out here, just real quick. You can see that there's a gap here. Now, we've already sold off down in here and really pretty much closed the gap, but there's still a little gap in there that I would keep an eye on. A couple of rules, and we've got some bigger, deeper gaps on Brent crude that we're going to talk about in a second. But you'll see this gap area right there on yesterday's open. This area right in here was absolutely critical, and we came down and filled it in. For the most part, filled it in. You can see we're right down in that vicinity. I would think there's still a little bit of a gap to work with right around $93. If you do see a sell-off there, more than likely you're going to crash and probably trade this value area right down around 90. It looks to me like that's the way of it today. Interesting stuff. Let's go on over to our futures contract. This is going to be your April WTI futures contract, and this is our TPO, our time price offering charts. You can see sort of our point of control has developed since the U.S. Open, and you're right around about 101.80. So that's fascinating. We're trading beneath the bottom of the daily, really the daily value area. Not a whole lot of volumes hit the market down in here. That sort of gives us reason to believe that perhaps we could go test out that point of control from Friday, which is right around 90. It looks to me like you're probably going to do that on an intraday basis. So fascinating stuff right now in the WTI market. If you're an oil trader, buckle up because we're not done yet. A lot of folks are still incredibly bullish. They believe 125, 150. I don't know that you're going to see any of that without boots on the ground. This war is going to have to escalate, and Iran's going to have to strike some very, very large blows, maybe to the existing infrastructure in its own right before you see that major move that everybody's calling back up to 125, 150, 175. We're just not seeing that type of response from Iran just yet. Now, it's early. It's very, very early, and we're watching the news by the minute. I am really waiting for some hint about what's going to go on in this region for the coming weeks and months. So you definitely want to be diligent when you're trading WTI crude. So we had to start with oil. I mean, that's what everybody's thinking here. Treasure Brian, good to see you. Treasure T. Marina, happy Monday all. Tina, happy Monday. Let's see. I think that we're in for some great trading, no question about it. But we do have a lot of other things to cover today besides WTI crude. Let's go ahead and take a look at UK oil. I know a lot of you are trading UK oil. That's North Sea Brent. That Brent crude contract is the global measurement of oil. WTI typically is the U.S. measure of light sweet crude, and Brent crude is sort of your global measure and more of an international barometer of where the oil markets are. And we saw a severe reaction. An absolute severe reaction right up around 119.50 was the high. That's fascinating, isn't it? Both Brent and WTI sort of stalled out right around 120 a barrel. That's absolutely fascinating. But in any case, nice big pull off there. I mean, you can see Brent's trading at about a $5 premium to WTI, which is typically the case. But we did see that Brent U.S. oil, UK U.S. oil spread, that Brent WTI spread last night got very tight as I've seen it. So really amazing stuff here. Daily chart, you'll notice that we have a little bit bigger gap here in Brent crude. Something like this is absolutely fascinating. Gaps get filled, gaps get filled, gaps get filled. Those are the three rules of oil and commodity trading. So definitely keep a close eye on that gap. More than likely, we're going to fill that in at some point. And where do you think that is? It's right around that 95 level. So be careful. Be careful with your risk management. Understand that these are big markets. These are deep markets, and everybody has an opinion on oil right now. So don't get swept away. Don't let yourself get too confused. You've got another gap down in here right around $75. Interesting stuff. Absolutely fascinating market dynamics. Spike low, probably where I would begin building my retracement sequence right there. That spike low right around 68, 68.75, 68.88. Come off of that 120 zone, 119-ish, and now you're pulling back right around 50%, 95-ish, 94.30. It looks to me like that's where we're going to be filling this thing in. We just have to wait and see exactly how these markets close today and then dive in with probably a little bit more ruthless aggression tomorrow. I think that's exactly when I'm going to be looking to trade crude tomorrow, Wednesday and Thursday. Definitely had to start with oil. That was an absolutely huge market. A lot going on in the global commodities landscape. And we'll go ahead and we'll cover all your favorite commodities like silver, gold, all of it. We are going to have to talk a little bit of volatility, though. It's very important that we take a look at the VIX chart here in just a second. All right, so week 11, Monday is the Iran war. Tuesday's existing home sales. Wednesday's U.S. CPI and EI inventories. We're going to have CPI live for you on Wednesday, so be sure that you tune in for that. You're also going to have Thursday, housing starts and initial jobless claims. Those are key levels, key numbers that may drive a little volatility. Probably not as much as you're going to see out of any headlines out of Iran. Friday, U.S. GDP, durable goods, PCE, core PCE price index, and then also the JOLTS jobs numbers all out Friday. Big news day on Friday. Probably going to be a very good trading session, especially going into the weekend. I expect more volatility and more fireworks throughout the trading week. All right, so what do we have here on our volatility index? The CBOE Volatility Index, the VIX. Pretty much everybody's watching the VIX closely right now, as am I. So we broke down the VIX for you for a long time, and I've spelled it out about as easy as I can explain the CBOE Volatility Index, Wall Street's fear gauge. When the VIX goes up, typically stocks and risk assets come down. Now, the VIX has a long-term average of right around 21. So if we're trading above 21, typically we would say the risk appetite is at least moderately elevated. However, when we get up above that 30 level, and this was an area that I outlined last Friday, I said you need to be watching 30. You can see we had some key events just in the last year or so. The 17th of October, 2025, we had that nice big run, that nice big rally there. You also had November 2025. You also had this sort of tariff panic back in April. So we're in an interesting spot here risk-wise. We opened, we had a tremendous run. The VIX basically was going to the moon because WTI crude oil, the rabbit was out of the hat. We had such a monster run in energies. Everybody started immediately worrying about recession, and they started dumping risk assets. That happened right away. Well, since then, the VIX has really stabilized. It's stabilized, 2650-ish, somewhere in that zone, is elevated. There is a degree of elevation there from our 21 long-term average, but it's not bad. It's not as bad as it was. So that tells me that maybe the markets are settling in and preparing to price this Iran situation for a longer period of time. Excuse me. That's key. That's key for us. That tells us that a lot of the uncertainty is leaving the market. Now, why would the uncertainty be leaving the market? We still don't know what's really going on in the region. We have a feeling that you're going to get more of a retaliation out of Iran. We know that Iran has a choke point there on that Strait of Hormuz that's disrupting global oil supply. And if we take global energy offline for an extended period of time, yeah, that's going to raise the risk assessment, the risk profile for every stock on the New York Stock Exchange. So why would the VIX be coming down? I don't know. It doesn't make much sense. Perhaps there was a bit of a panic yesterday on the open, and a lot of traders were like, oh, if crude oil goes to 200, what does that mean for stocks? Things like that. And now that we see oil sort of stabilize and off about, $25 from those highs, from those session highs, then you probably feel a little bit better about stocks than you did, say, about 8 hours ago. So a lot going on here. The VIX is definitely coming back down into what I would call a legitimate range, not a crazy elevated risk scenario where you're up around 35. That's an elevated VIX, 35. And now we're trending back down around 25 and 20, down to our long-term average of 21. So, the more things change, the more they stay the same. To me, when I saw the VIX was up here, I went, whoa, yowza. Who knows where we're going? What's happening? Does somebody know something? There was some terror activity over the weekend. There was bombs found in New York City. There was a couple of incidents where we had improvised explosive devices that were basically dictating that not necessarily dictating, but definitely promoting that idea of fear that there is going to be terror attacks on the West. These are things that we're going to cover in our weekly newsletter that's going to come out. But the biggest thing we got to be concerned about right now is the flow of oil out of the Middle East. That looks like it may be stabilizing. Still a logjam at the Strait of Hormuz. That hasn't been solved, but maybe those emergency stockpile reserves, when those are released, maybe that buys you a couple weeks to square up that Strait of Hormuz situation. That's what I would say right now, but risk definitely leaving the market a little bit. We'll see exactly where these things close, and that'll give us a better idea to what we need perhaps to trade tomorrow with a little bit more confidence that we're trading today. Today's a challenging day. It's whipsaw. It's whipsaw everywhere. If there's any markets you'd like to look at, go ahead and let me know. Let's go on over and look at some 9 EMA trades. Remember the 9 EMA strategy. Feel free to enter your email address there and get your free strategy pack. I'll go ahead and see if I can't drop this in the live chat here out in YouTube land. So feel free to head on over there, enter your email, and get your strategy pack, PDFs, videos, and a custom EA that is designed to trade the 9 EMA strategy with a little bit of confidence and a little bit of aptitude. That's what I would say. Great Britain Pound USD, interesting. Did we just get a signal on this chart? What do we have right here? Great Britain Pound USD, and that is a sell signal. So let's step up. Let's go and sell this market, and that's sort of going to give us our trade, our profit target. We could put it down in here a little bit, perhaps, a little bit, betting on that dollar to make a bit of a rally. Stop loss, probably the best stop loss you could use would be right up above this swing high where the market was, in fact, elevated with our RSI being above 70. Watch the videos if you're not familiar with the strategy. I spell it out for you, show you exactly how to trade this thing. Also, the PDFs show you everything you need to know. Essentially, when we're looking at an RSI above 70 or below 30, we're looking to trade. Above 70, a bearish cross under our 9 EMA is going to get us into the market. And if we're below 30, we're looking to buy on a cross over the 9 EMA and a bar close. And our EA pretty much spells it all out for you. You add it to your charts, and you've got all sorts of different things that you can do here. You've got drag and drop functionality with your single click trader. The EA immediately is going to bring up your 9 EMA and also plot RSI in your charts, and you're going to get those trade setup identifiers with the purple and gold triangles in real time. So you're definitely going to want to check that out. It makes life a little bit easier when you're trying to trade something like this in the live market, especially on multiple markets. A pretty good trade that came across the board in Bitcoin. This is one that we executed last week. You can see that it was a nice sell, nice compression break, and we just sort of trended down. Now Bitcoin's sort of reversed. It's reversed. You're going back up above that 68 level, going right around that 69.70 zone, which has been huge topside resistance. So what do we do with it? How do we unpack it? Well, we don't really do anything right now with a 9 EMA. The 4-hour chart, 9 EMA on Bitcoin, we're just sort of waiting. Price didn't get beneath the lower envelope, which was 30. We really didn't have a chance to buy back into this market. So I would just be riding the storm out if I was in the 9 EMA trade, or if I was still even holding shorts here. I don't know that you should still be holding shorts. That was a pretty darn good move and paid you off pretty well. So definitely keep an eye on Bitcoin. I'm still like 58, 59 as being a potential downside support level. But as far as what can we plan for Bitcoin in the coming days and weeks, who knows? Who knows? I mean, it's been flat for so long. I'm not really overly excited about the top side of it, returning to 100 or 125. But if the crude oil market of the last 36 hours, 48 hours has taught us anything, markets can go absolutely haywire, and Bitcoin could easily get a big rally back up to 100 in a very, very short time. I don't know, though. I don't know that I see that. We just got to wait. Look for something to happen. Look for some action. All right, let's take a look at gold. Gold on a very short time frame. You'll notice that we didn't start with gold to really talk about it. It's because it's very tight. And we're looking at a loss of about 1.38% today, but really flat. We had a test of that 5,000 level. We'll talk about that in a minute, and a really nice bounce off of that. But as far as like a 1 minute tight scalp here for gold, what are we really looking at with this 9 EMA? Not much. This market is absolutely flatlined for about the last hour or so. We're just not getting enough movement potentially to get either a buy or a sell setup. Maybe if we get beneath 30 and then rally, we'll have an opportunity to hit this thing to the top side a little bit later today, maybe later in the stream. But for right now, not a whole lot going on in gold. Very tight 1 minute bars. We're not seeing the big movement that we're seeing definitely out of crude oil. Let's see, silver. Silver's flat as well. Another tough market, sort of in consolidation, around $84 today. Surprising. You would expect big moves out of gold and silver, especially on a really live market day like we're seeing today, and you're not really seeing it. Seems like everybody's trading gold, and they're more interested in gold than they are oil, black gold, instead of trading gold and silver themselves. So keep an eye out, for some movement, maybe some late day movement here in this gold market, but I'm not really getting too carried away with gold just yet. All right, let's go ahead and take a good look at this gold market. The VIX continues to come down. That's a good sign for equities traders. You can see that our tote board is red, but it was a lot deeper shade of red not too long ago. You bet you paired about half of those losses on Wall Street in what has been sort of a weak session thus far. Let's go to gold. Okay, so gold is always fascinating. It's always a fascinating market because everybody seems to want to trade it, and I get a lot of messages every day. I got to answer them right after this one, but today, right after the live stream. But this day has just been jam packed with action, so I've been going in about 50 different directions to open up a Monday trade. The big thing we need to remember about gold is 5,000. Now, sometimes technical analysis is easy. Sometimes it is real easy, and this is pretty easy. 5,000, we talked about 5,000 as being a viable downside support until we see really an epic shift in sentiment, and I don't know that we get that. However, be ready for our washout. I marked last week's low. Absolutely imperative you know where that is, specifically if you're trading gold. So 49.96. Understand that swing low is probably going to wash out a bunch of retail longs if it's hit. So keep a close eye on that low. You probably don't want to be holding longs if you trade beneath last week's low. Very important that you understand that spike right around 5,000 is absolutely key. Now, earlier today, we saw the big sell-off that went down to about 5,014. Probably a tough scalp. I don't know that my entry point would have ever been 5,014. Probably would have been 5,005, 5,250, maybe 5,009 if I was aggressive. But there were traders out there that bought 5,025s, quarters. They bought that quarter 25, and it worked out very well for them. The biggest thing we need to remember about gold right now is nothing's happening. This is a flat market. Now, I know the daily range is big. However, that doesn't mean that we're trending. We're not trending on an intraday basis. Keep a close eye on your long-term technicals. Understand what a flat market is. 1, 2, 3, 4. 4 flat days you've traded inside of last Tuesday's spike lows. That really dramatic selling beneath 5,000. Be very careful here. Be very, very careful here. I don't want to see anybody get chopped out trying to buy 49.95s and hoping that the market reverses. More than likely, given this market dynamic, big sell-off, trading sideways, that market is condensing. It's tightening up. We're getting ready to blow some steam off. It may be bullish. It may be bearish. This looks like, to me, it looks like a bearish type of a situation. It really does. So you got a spike high there. You got sort of our spike low, our swing low, and our 38% has just been the line in the sand for these markets. Have not been able to sustain any action above 38%, which is about 51.61, somewhere in there, maybe 51.50-ish. Interesting stuff happening at gold. I'm sort of looking to play the washout beneath last week's low. I think that probably is good for at least $5, $10, maybe $15 on a real fast sell-off. I think that could definitely happen. What would be the situation, though, that would bring that kind of selling into gold, especially with a war raging in the Middle East? Probably going to have to be a stronger dollar. U.S. dollar's got a little bit, it's gained a little bit of weight today. It's up about 99.13 as your DXY, up about 0.25%, but still been relatively strong since the bombing started in the Middle East. So definitely being treated as a safe haven. Fascinating stuff here with your gold market. I think it's just flat for right now. I would wait. I wouldn't get too carried away on exactly making a million trades in the gold market just yet. I want to see this market open up. I want to see it trade beneath that 5,000 maybe, get the big washout, and then we can start talking about getting a great buyback. Not a good buyback, but a great buy because we still do hold a bullish bias here towards bullion. I think that's probably the way to be, especially with the geopolitical uncertainty that we're facing. All right, let's get it back on over to our Week 11. You can see for today, not much happening. As far as our news events, New York Fed, 1-year consumer inflation expectations, 3%. I mean, that really doesn't mean a whole lot to me. I think that's ill-founded. That number is from February before the war kicked off. I don't see that as even remotely important. You'll see the 3- and the 6-month T-bills. Look what you have there. You sort of have that 6-month T-bill staying firm at about 3.535, but then your 3-month T-bill is down a little bit. Suggests that maybe yields are going to come down just a hair. I don't know that that's the case either. This looks to me like just a little bit of random price action that has developed here in our bond markets today. So I'm not too carried away with that. I don't think that's much of a market driver at all. We definitely want to hit our trade update, though, because it is live. I do believe you've got Iran NFP and the Euro Great Britain Pound. This was a trade idea that we put out last Friday. And your entry point was right around that 50 mark, I believe. It was 86.50, somewhere in that zone. And it looks to me like we're live. So you can see we got the big sell-off thus far in March. I really like this level down in here. This area between our 13-period EMA right there at about 86.49 down to our 38% on the monthly, 86.25. That's a key zone. That's a key 25 pips. So we're watching this closely. I think we have an opportunity to make a few bucks to the top side. Let's take this down to a 30-minute chart and see how our levels have really reacted. You see our TPO stuff, sort of tough to do on that on the OTC markets. But you can see we came off in a big way. Sort of there was your spike low that went down and got us involved at 86.45. And you got a bit of a bounce. You got a bit of a bounce back up there at about 86.56, somewhere in that. So realistically, nothing's happened yet. There's nothing really to see here. We're only looking for about 40 pips to the top side. So your profit target's going to be somewhere right up in here, right up in front of that 86.7 mark. Should be a pretty good trade. You can see we're not really trending. This would be what we call an accumulation trade. You want to see bidders just sort of join the party over time. More than likely, this looks to be a swing trade where you're going to be in the market maybe 2-3 days. It's not a bad week to be doing that. We don't really have much out in the way of news items from the Eurozone. The war will drive pretty much all sentiment, even towards a pair like the Euro Great Britain Pound. Now, we do have UK GDP out Friday, but it's not really a huge release. It's not one of those that shakes the markets up. So we're definitely watching that trade idea. I think we have an opportunity potentially to get a few pips to the long side. But other than that, I'm not really too infatuated with much else on the Forex, even though it is moving. We got to check in on our let's see, our dollar CAD, because that is a commodity pair. We want to be in the game, so to speak, when crude oil is moving. So let's go ahead and take a look at our daily chart, dollar CAD daily. So why would the Canadian dollar really start flexing against the U.S. dollar in this environment? And the answer is relatively simple. It's because WTI crude oil is on the march. It's on the rally. When you see strong crude oil pricing, typically you see strong Canadian dollar pricing. So what do we have? Well, we had a bit of a correlation here where the situation was relatively straightforward. You had a rally in crude oil, a massive one, and the U.S. dollar, Canadian dollar came down as that Canadian dollar gained ground on the USD. Now, is that over for now? Could be. For me, it's still very bullish, though, for the Canadian dollar. If you were taking a look at this chart, you'd say, okay, 135.80. We sort of came down, had a look at maybe February's lows, and then bounced back up a bit. This would be an area where you may want to sell, where you may want to be looking to take a sell. So maybe a spike high there, something like this. And then there's your spike low, maybe 135.97. I like 136 to be a potential short, just because WTI crude is hanging in there. It looks like it's going to hold some market share today and be a force to be reckoned with, at least for the next several days. So we just got an alert. An alert just went off. What do we have here? Let me see. RSI final. XAU USD 1-minute chart. There's your bid. Potentially, there's your bid. Do we want to take this bid or not? Looks like it's going to lose, but let's go ahead and have a look. Single click trade. Let's go ahead and bid it. Okay, so if we bidded this market bidded, I don't think that's a word. But let's say we took the bid on this 9 EMA trade on the gold, okay? So we just took it. The market retraced. It went up in our favor. We got our signal. We were down here in oversold territory. 7 bars later, we get in. That's our over-under. It's got to happen within 7 bars. And then what do you have? You have a nice move, and then we immediately reverse. So this looks like one where we could get knocked out of the box. And definitely, you're going to want to have your stop losses down. You're trading 1-minute charts. You're going to have to do that. The market right now is going crazy. Something just happened. It looks to me like there is a news event. No question about it. As far as, did you see, I know we did that in retrospect right there, managing that trade, because it did happen fast, and we got over to it late. But your bid right there, your pullback almost happens every time. Our stop loss could have been right beneath our signal bar, which I don't recommend. I recommend, especially on a 1-minute time frame, giving this thing a little bit of room to work. So it would have been right back down there beneath our swing low, somewhere in there. Don't put it right on it. Give it a pad. And you see that sweep went down, and now it reversed. So do we have an opportunity to make some money here? I think it's going to be really challenging. Something like this. You could probably put that up there at about a 1-to-1 ratio and have a shot at maybe a tight scalp on a 1-minute chart. Really tough to trade these 1 minutes, especially this time of day on gold, but there's definitely something going on in the market. There's a lot of volatility here, and we're starting to see this trade unwind a little bit. Maybe we get a break to the top side. If that was the case, that'd be fantastic. But right now, the important thing is we have our risk dialed in. We know where our stop loss is. We know we're risking between 1% and 3% on any given trade. And if we get hit, if we get knocked out, then we're out. It's as simple as that. Let me see. Gulnaz, please, oil, WTI. I talked about oil for about a good half hour. Just replay the stream. No worries. We'll look at that here in just a second, though. It might actually be worth pulling it up on the 9 EMA chart and see what happens with a little bit of WTI action. It's actually a good idea. All right, let's do it. Let's go to File, open up a new chart. And you're just going to go right here to energies, and you got Brent and WTI. Let's go ahead and click WTI. That's the CFD market that Switch Markets offers based on WTI crude oil futures. Let's go ahead and go right here, color on white, hit OK. And then what do we have? We've got our let's see, our free risk management, our EA. We're not going to go with the risk manager today. We're going to do a clinic later on this week on how to trade volatile markets. Okay, you can see right there, what do you have? A 1-hour chart, really a fantastic sell that the 9 EMA gave you right there. How about a 1-minute chart? Still sort of flat. We're rotating right around $95. Shouldn't surprise anybody. Shouldn't surprise anybody that we're flattening out WTI this period of the day. You can see that we've got to get beneath 30 or above 70 to be able to take a shot potentially at a trade idea. So not really much going on there, at least on the 1 minute. Let's go to a 5-minute. You can see that 5-minute buy right there got chopped out, knocked out of the box. Are we working on another one? Not really. So the market's really calmed down here for WTI crude. It's one of those things that if you are trading it, be careful. It's flat right now, but that it can spring to life at any time. Take a look at our gold trade. Going in the right direction. Maybe we get a little accumulation. That would be fantastic. We're not really seeing it just yet. I always lose confidence when we don't get the nice big bullish break within a few minutes, but perhaps we get the reversal. Perhaps we get stopped out. That's just sort of the way of it when you're trading systems and strategies. The important thing is that you execute the strategy and do it with solid risk management. But this trade right here doesn't look real great, does it? Big red candles typically will knock you out of the market before we get a little bit of left to the top side. That's why trading the 1 minute is extremely difficult. You have to be dialed in and ready to go with a lot of trades, and your risk management has to be dialed in and ready to accomplish what you want to accomplish, which is defend your capital and stay in the markets. So let's just give this another second and see if we get knocked out, stopped out. That's always the thing when you get a 1 minute sweep on one of these 1 minute trades. You get knocked out, and you really didn't prove anything. The only thing we proved is there really wasn't much money coming into the market. Right there, we just got our stop loss hit, and we're gone. So we just got stopped out. Sometimes that happens. Personally, I don't mind being stopped out just because I hate losing. Don't get me wrong, I hate losing. But typically, when you get stopped out of the market on these trades, you need to be looking to get out because the market more than likely is going to come way down. You see a little bit of a bounce right there from right around 5,087, 5,085. Interesting stuff in gold. Well, started the week with a little bit of a loser there on the 9 EMA. Not really too worried about it. Pretty good trade we have going in the Great Britain Pound USD. I always recommend that if you're having trouble establishing consistency with any strategy, move your time frame out. Step back from 10,000 feet. Use longer time frames. More than likely, you'll find more success there as opposed to trying to scalp 1 minute charts. That can be extremely difficult. All right, everybody, we've covered a lot here today. I think that the big show, as you can see, 30-minute chart, time price offering, April WTI crude, very, very tight. Very tight. Long term, what do we think about oil? It's tough not to be bullish, but we also have to remember that there's a couple of things that could really deflate these oil markets. No question about it. A couple of things could really derail them. Of course, this is it. Must be very careful. This is our lead story. Iraqi Foreign Ministry warns. You can see that we've got all sorts of different websites that are tracking exactly what's going on in the Strait of Hormuz. You can see there's not much going on. Not many things are going through that region. And that suggests that there is a major bottleneck in the oil supply for the globe. So that's the number one story. Number two will be boots on the ground. If we do see the United States and Israel put boots on the ground, let's go ahead and just check our poly market odds on this. But we want to see hit it by the end of March. Okay, that's already done. Let's go to Iran. This is poly market. U.S. forces enter Iran. What are the odds right now? 40% say by the end of the month we have boots on the ground there. 64% believe that you're going to have boots on the ground by the end of the year in Iran. Absolutely fascinating stuff. I don't really know what to say about it. I think those odds are clearly very speculative, but what we do know is this. If you see boots on the ground in Iran, that's going to be a major escalation from where we are right now. That's probably going to lead to higher crude oil prices. If you do see maybe more airstrikes on infrastructure, we saw Israel take out some Iranian infrastructure. That's typical. Things like that are going to be bullish market drivers as well. Anytime supplies are knocked offline, be it the Strait of Hormuz, be it oil tanks on land. We talked about those Kuwaiti storage facilities were full, so they had to cut production. Those are all pretty ripe targets, I would think, for some sort of missile strike. But we haven't seen the Iranians really hit. Other than one strike on that LNG facility in Qatar, we haven't seen the large-scale destruction of the oil infrastructure, which is what we expected. Haven't got it yet. Not to say it couldn't be coming, but definitely keep an eye on that. So we're watching boots on the ground here from the United States or Israel. We're watching attacks on that infrastructure, and we're also watching terror attacks here in Western countries, places like the UK, places like the United States, Germany, the EU countries. Be ready for all of that. All of those things are going to promote fear and angst in the markets, and they will send crude oil back up above 100, and it will happen fast. Now, is the top in for WTI? Well, if you get any sort of unconditional surrender, if you get any sort of stability in the Strait of Hormuz, maybe there's a ground invasion there, and maybe the Strait of Hormuz is secured from the Iranian side. If that is the case, then potentially yes. You could see the crude oil prices crash in a big way, and that would be predicated upon global supply coming back online in the near term. All right, everybody, I've talked long enough about this stuff today. It's going to be a fantastic trading week. Be sure to join us. I'm going to be scheduling a Switch Markets live webinar on how to trade volatile markets. That's going to be scheduled for Thursday, so that's going to be done later today. Be sure to check that out on the Switch Markets YouTube channel. As far as the rest of our coverage this week, we've got CPI Live. That is absolutely huge. We're going to have that for you Wednesday. I'll have that in real time. We'll be trading that along with whatever news breaks. As far as the news here in the United States, be ready. Be ready for any war escalation news, any de-escalation news. It will shake the markets. The single biggest thing you have to remember right now is that there is a negative correlation between the price of crude oil and your risk assets, your U.S. indices. Understand that. That is the key. As crude oil goes up, risk assets and stocks go down. That's the relationship right now. It won't be like that forever, but right now that is the way that it is, and we got to do it. All right, let me see. One question here, and then we're going to go ahead and kick off. Johnny, good to see you. Johnny, welcome. Thanks for contributing to the live chat. It's been very quiet in our live chat today. Usually it's popping off pretty good, but that's okay. Let me see. Can you mention how you use the RSI and the 9 EMA, and please? Is it you see the cross on the daily or just the higher time frame in general and enter on a lower time frame? Yeah, that 9 EMA, Johnny, is very simple to use. We're going to use it on all time frames. I personally favor longer time frames. They give you an opportunity to get into swing trades that are pretty good. You just have to lay out a little bit more risk with regards to your stop loss location. But essentially, what it is it's you get above 70 on the RSI. You're looking for a bar to cross under the 9 EMA, and that's going to be a sell signal. If you see the RSI beneath 30, and then the price bar crosses above the 9 EMA, that's going to be your buy signal. And what we did was we put a 7-bar lag. So it has to cross over within 7 bars or else you don't get that EA signal. I recommend just plugging in the custom EA. You can find it right there on that 9 EMA strategy. Just enter your email, sign up for our strategy pack. You'll see that it is a zip drive. So just go, or excuse me, not a zip drive, but it is a zip file. So just open up the zip file, put the EA inside of your MT5 and you're ready to go. There's also PDFs in there and a couple of videos on that page. I just put the link in. Check the link out. It's got everything you need to learn how to trade the 9 EMA, and you should be able to do it in about 15 minutes, 20 minutes. It's not the most difficult thing we ever have done. This TPO, this time price offering chart stuff is far more difficult, reading order flow and volume profiles. Okay, everybody, I'm going to go ahead and sign off for now. I want to thank you for joining me today. I think it's going to be a fascinating time to be in the markets. Your risk management is everything. If you blow your risk management and you get the wrong way in, say, a crude oil market that just jammed up to 120, you're going to get in big trouble. So if I could give one piece of advice to traders right now, you're taking these trades, as soon as it's a confirmed loser, exit the market. Don't mess around. Don't dollar cost average into these things. Don't try to buy or sell your way out of trouble. You can't do it. There's too much volatility. The daily ranges are too big. I went on last week. There was a few cheap prop firms ordering, or not cheap, but prop firms that were ordering real cheap evaluations. And I got in there and I took a few shots, and it was funny because I nailed both trades and the trailing drawdown still stopped me out. I still lost both challenges just because my trailing drawdown, even though I made a bunch of money. So you have to be very careful with that. If you're working with a trailing drawdown on prop, these large daily ranges can be absolute daggers. You've got to dial your risk in. You have to understand that maybe taking smaller profits, yeah, it might look good in the short term, but you have to take probably medium profits when the markets are this volatile to really justify the risk and why you're in the markets in the first place right now. Risk management, money management is the game. Be careful. All right, everybody, that's enough for me today. I'm going to be back tomorrow. We'll have more from the Iran front. Any developments, we will be covering those probably live in real time. Tomorrow we've got the hot market watch, oil, gold, and FX majors. Be sure to tune back in. We're going to be looking at crude. We're going to be looking at gold. We're going to be looking at the FX majors. There's a lot more trades on the board we didn't get to today, but we'll probably be looking at the yen tomorrow. I want to see a little more development out of the yen, but it is moving higher. Fascinating stuff. The U.S. dollar holding its firm, holding its weight. It's not losing against the majors, and that's interesting. That's a wrap. You guys have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.